Hello, everyone. Welcome back to the QX Financial Podcast. Today, I have my good friend Sherody Alred here joining us, and some of you don't know, some of you know who I am. My name is Django Castro, CEO, founder of QX Financial. So, Sherody, thank you for being here today.
Yeah, thank you.
All right. So today we're going to talk about some misconceptions or some myths about the usage of life insurance. And all of you guys know that it's a great part, it's a good part of a good financial plan. We gotta have protection in our plans. So today we're gonna talk about some, like I said, some of the myths, some of the questions that we get for clients about the use of life insurance. So are you ready, Charity?
Yep, let's go.
All right. So here comes the first question. Isn't life insurance only for after I'm gone?
So this is a common misconception. Everyone, when they think about life insurance, it's like a cloud covers their face, and they just think that life insurance is only for when they're dead, and that's just not true. Especially with whole life insurance, there's a lot of other things that you can do with that, including a lot of the writers that we tend to put on our packages.
What are some of the living benefits of actually owning life insurance?
So some of the living benefits that we tend to work with are things like the critical illness rider. So if you tend to get, if something happens and you're critically ill, you can actually take down or have access to the vast majority of that death benefit. Another one is terminal illness rider. And with that one, if something happens, say you get cancer and you have, 2 years that you're given, you then have the access to that death benefit to be able to either pay for treatments or, do something to create memories while you are still there with your family. It gives you a lot of options. And normally you wouldn't have all of those options with most of the other products that we tend to see, 401ks and things like that. They're very limited, and you may not be able to have access to those things in your greatest time of need.
Exactly right. And most people forget that when you have permanent insurance, that cash value is also accessible, right?
Right.
Awesome. It is very true. So again, it's not only when you die, there's a lot of things that you can use it for while you're still alive, which actually leads me to question number two. I get this all the time. Can I actually afford life insurance? Is life insurance really expensive?
That is a common question that we get. And, it really depends on the package that you're looking at or the kind of policy that you're looking at. What we tend to advise with our clients is, instead of looking at it as an expense, look at it as a saving or as an investment almost, where you're putting this money away and you have access to all these other benefits. It could be used for retirement. It could be used for funding big ticket items. It could be used later in life if you need that critical illness or terminal illness, or just access to that cash value for increased medical bills. There's a lot of different things there. I personally use mine kind of like a savings account, where I'm able to put extra into that account and I'm able to access it for big ticket items, or eventually when my kids go to college, I can help them pay for college by accessing that cash value. There's a lot of different benefits and a lot of use that you can use this cash value for that not a lot of people think about. So instead of thinking about it as a bill, I think about it as, how much am I saving for myself? How much am I putting away for these things down the road that I may not be able to necessarily plan for, but I want to be able to have that there just in case, like a safety net.
Exactly right. So I guess it's another way of saying um, when you need it, you wish you would have had it, right?
Mm-hmm.
And so from that perspective, that's too expensive. Well, not really. But again, it all depends on the situation. So again, reach out to your advisor if you're watching this, and then they can tell you what is really your best option. But it should be, for most people, it can be well within their budgets. All
Right.
right.
And when we look at the actual cost, I mean, with all of these benefits considered, when we look at the actual cost of the insurance, it's really quite surprising how little it is. It's really quite comparable to a term insurance policy, the cost of the actual insurance. Everything else is going towards building up that cash value and helping for a rainy day.
Exactly right. Which actually leads to my next question as well, which is something that a lot of people hear about and talk about, which is, shouldn't I buy term insurance and just invest the difference, right? We know it's a very popular strategy. Other people talk about it. What is your take on that?
So I've dealt with clients for years now in many different situations. And I was first taught that you buy term and then you invest the difference. After working with so many people, though, I've noticed the number one trend is that people say this, but they don't actually do it. They don't actually save the difference. They, again, like going back to our other question, they like to look at their insurance as a bill, and they they just pay that bill every month, and they don't consider the difference. They don't even look at what that difference might be, and let alone invest the difference. We're seeing that more and more people don't even have enough in their 401k, which tells us that they're not investing the difference.
That is true. They spend the difference, or sometimes they lose the difference, in the sense that we also have to think about market volatility, right? Actually, I'm going to put a chart for you guys right now so you can see what the S&P 500 has done for the average investor over the last 20 years. And it's about 3% or so. Not a lot, right? And that has to do with people, making bad investment choices, not rebalancing, not, allocating the portfolio correctly. So it sounds really simple to just invest the difference, but that component in itself can be fairly complex, and a lot of people struggle doing that, right? So if we can facilitate and make that an easier process for our clients, that's when you actually get that benefit. So as an idea, it sounds great, but in practice, actually it almost never works out, right?
Right.
Well, now let's go to the next question. Sheradita says, don't I just need enough life insurance to cover my daily expenses?
This is probably one of my favorite questions, just because I personally, with my own policy, know for a fact that is not true. As I was considering how much my family would need if something were to happen to me, I not only had to take into consideration the bills that I might be paying for or funding, but also the other services that I provide to my family. I am privileged enough that I get to work from home, and so I don't have to pay for daycare. Well, if something happens to me, my husband's going to have to pay for daycare, and that adds up really fast. Not only that, I tend to be the one that takes my kids to the different activities. If my husband has to get another job, or if he has to do these other things, right there, we're going to have to hire someone else or find a neighbor or someone that can take my kids to their activities. So not only should it be just the bills that you have, but it should also take into consideration other things that you provide to the family. And outside of that, how much time is your spouse or partner going to have to take off from work in order to mourn, or to have that time for closure? It's a very sensitive topic, but it's something that you need to think about.
Exactly right. And for those of you that are watching this video, if you want to sit down and actually do a real analysis of what is the right number for you, let us know. We're happy to do that for you, obviously at no cost at all. But yes, it takes sitting down and actually figuring out what will those numbers be. There is a right way to do it, actually. So we'll show you how the human value index works and how we calculate those amounts. And just to be clear, obviously the human life is incalculably valuable, right? We cannot calculate the ethical value of a human life, but we gotta put a number somewhere, right, to make a good financial decision. So we have a system that has been developed for us to help you do that. But very, very important that you get the right amount, just like Shiradi is mentioning, because then the people left behind, they are the ones that gotta deal with the problem, right? All right. So one last question for today. And this is a very common thing that we hear all the time from clients. I'm young, I'm healthy. Why would I need life insurance now? Why don't I get it, once I'm old and now I need it?
I think you really answered the question right there. I mean, get it when you're young and healthy. You can get a better rating, which means that cost of insurance, like we talked about earlier, is going to be very minimal. Being able to have a younger person who's healthy, doesn't have any long-term things following them, they're going to get a better rating naturally, and that's going to follow them through their life, which is fantastic. If you wait until you're a little bit older, then, life happens, things start popping up, and your health starts to decrease a little bit.
Exactly right. Life insurance is one of those things that you can only buy it when you don't need it. When you actually need it, you can get it. So again, if you have the opportunity and the ability, don't overthink it, make a decision. You can always adjust later, but the best time to get it is today. And obviously, we will be happy to help you do that if you want us to. All our contact information is below. So Sherry, thank you for your time. Thank you for answering those quick, FAQs or questions that people get all the time. That's all the
Yeah, no
time
problem.
for us. And I look forward to seeing you in the next podcast.
All right. Hey, thank you.
Bye-bye.